Good morning. Ira Epstein with your morning flash update for this April 14th, 2023, about 8:27 a.m. Central Time. So as we look, stock market down. All the bank earnings came in, the big boys, and they're better. Okay, across the board, they're better. Yeah, there's some warnings, but I was surprised to see how much money flowed into J.P. Morgan. Here's a bank that's going to earn about $81 billion on deposits. I mean, it's insane when you think of the numbers they're going to get. They're going to have to pay out more money, but it's interesting where people did go. They didn't run away from the banks. The trading at the JP was not good. They didn't make money in the first quarter. So interesting how it all broke down. But the fear that the big boys would be in trouble, not there. What did it do? It initially lifted all the stocks, and now the market's thought about it and market backing off. You're backing off in the gold. Welcome this break. You've already been down $24. You're getting a little bounce off the low. You got overbought. You didn't embed. That gives you a chance to pull back. I see the same thing happening in gasoline. This is the pullback where I'm looking. I've already told my subscribers that we're going to move away from the May into the June now. If you look at the seasonals, this is where you get that little wobble in the market, then you move up one more time. So I'm very attuned to what that could be doing, and I'm very, very friendly this market. I question if this wasn't the break to look at again. I don't see much in the grain market other than this. You're going to see farmers fence post to fence post, night and day planting right now. The weather has been unbelievable. We're normally 58 in Chicago. We've broken records a couple of days this week, hitting 82 degrees. What if I tell you we're going to be 80 today and we might get snow? You heard the word. Snow on Monday is in the forecast because this is abnormal. We generally come to the end of the winter, not go into spring this fast, and everything's green. The flowers are out. I mean, it's all over the place here, completely different. So weather, very strange this year. Dollar got beaten up an awful lot. Let the dollar come up, the other currencies fall back, and that could be where your entry points start coming in. So at the end of the week, I'd love to see some corrections come in. I think they offer opportunities down the road, and we'll talk about that in my morning subscriber videos. And remember, if you like these videos, please give me that thumbs up. Advanced retail sales down 1%. They were looking for the market to be down 0.5%, so this is worse than the market thought. And that tells me, maybe the consumer is spent out. You got to be careful here. If so, that hurts growth. Because the one thing that's been going along is this consumer hasn't balked. I see that the consumer's gone crazy in Asia, parts of Europe. If you've watched what's going on with LVMH sales today carrying, when they were talking how their Kelly bags are selling out, these things I think start at $25,000 and they move up to $250,000 or more dollars, and they're moving like hotcakes. So interesting. You can see ex-auto sales down 0.8. So this isn't a fluke. Sales are starting to come down like that. The consumer's feeling the pinch. The Federal Reserve industrial production capacity up 0.5%. Well, that's better. They expected it up 0.2, up 79.8% in the March capacity. That's better. We're looking at the revisionment from February, and that's better, and you were better in the utilization. So everything's better there. Interesting. Import-export prices. The market was expected that the imports would be down 0.1. They were down 0.6. We're not importing inflation. That's the way to look at it. Export prices. Prior month, they were down 0.8, but they're still down 0.3. We're not really sending out inflation. And petroleum import prices in March were down. I don't think that'll be the case necessarily in April. University of Michigan consumer sentiment, the prelim number. Pay attention to that. That's the big boy number. That comes out at 9 o'clock, and business inventories come out today at 9. So those are the things that I will be looking at to see what goes on. But my most interesting part is I want to get a break in the metals. I want to break in the stock indices, and I want to rally in the dollar so I can start playing with that. I'm wildly bullish in the gasoline. I expected a break. I don't want it to be a one-day affair. So far, that's all it is. We'll see where that goes. Bonds and notes, they're starting to add back some yield, if you will, to the marketplace. So now what is that about? Well, it's probably about the better numbers we just saw. Even though the consumer's backing off, you saw the production numbers were pretty darn good. How do you play markets like this right now? When you get to a point in the market where they stop going up dramatically and they start the consolidation, one of my favorite tools to look at a market if you're an active trader are pivot points. Because what you do is you find a center point in the market. Your charting software probably has this formula. And then you're looking for sell numbers above the market, buy numbers under it. And my difference is I tie the slow stochastic study into it and put it together. I created a free video series. I did this so that people would get to see how I teach. Because once you go into the Bollinger Band and the Outside Day courses, they're not free. But now you get with this one to see my method of teaching. It's a 3-part series. It's easy to work with. You'll see how we do it with our charting software. If you don't use ours, you have your own. All you need to do is go to iraepstein.com under the free offers, pivot points, move your cursor up here. There'll be an icon that shows, give it a click, and away you go. I'll see you later today with our end of the week wrap-ups. I'll try to get them out tonight during the Bulls game. I hope they beat Miami. I'm Ira Epstein. You have a great day.